Hello, folks. This is Raj Sastri from Raja Option Trading. Today, I want to talk about top oncology stocks. As you all know, cancer is second leading cause of death in the US, 21.7% behind heart disease. So we have a lot of great American companies which are trying to cure and fight the cancer. And there are some international companies also. So with that, oncology market size is valued at 136.7 billion in 2019, and it's poised to grow at a compounded annual growth rate of 11.9%. So these companies are really growing and innovating, and at times they are spending a lot of money, without much result also. So it's really good to see these companies are really committed to fight the cancer, which is second leading cause of death. I got some images on the right hand side, one from Mirathi.com, other one from Five Prime. These companies are fighting various types of cancers, through various mechanisms. So it's really great to see these companies are really doing a kick-ass job. So with that, let's look at the list of companies. So the companies in the bold are my favorites: Five Prime, Celldex, Curis, Aspera, Cardiff, and list goes on. We will look at these companies in a little more detail and why some of these companies make sense. So with that, this is the full list. So this chart is organized by 1 year performance. It's really a descending order. The company on top, it's performed very well last year, 943% performance in last 1 year, and it's in a descending order from that point onwards. And I also look at the revenue growth itself, as well as the gross margin and the performance, all these three factors into consideration, and also the cash and debt. So many cases, as you can see here, first couple companies are really, they got negative revenue growth and they may not have good cash, but these companies are really trying to do very good job at research and development and coming up with these causes, cure for the cancer. So that's one of the reason, by looking at the performance and by reading their prospectus, it felt like these companies have a shot at curing this disease. And then we got, as you go down the list, we got some companies with the good revenue growth. As you can see here, we got Mirathi Therapeutic, very good revenue growth. We got Nand Quest. It's really, it's they're coming off of a small base here. It's doesn't really matter that much, but nonetheless, there is a revenue growth. And then we got companies like Beijing. It's based in China. It's a very good revenue growth and gross margin. And then we got good companies like Novacure, Wanda, Guardant Health, Gridstone. It's again a very small company, and really doing well with even COVID indications. And then we got lower price stocks like Bicycle, which is doing well. And we got great companies like Eli Lilly, still working hard and doing great innovation. And then we got Siegen and AbbVie. Again, AbbVie is a very good company, and it's a higher market cap type company. So now let's look at profile of couple of these companies and see how they're doing and what they're doing. So with that, let's look at a smaller company here. Company is Five Prime Therapeutics, Fprx, about $1.74 billion company. And these guys are focused on discovering and developing innovative immuno-oncology protein therapeutics. This is really a good cause here. We got CEO Thomas Civic, and the company stock price is around $37.83. As you can see here, company has been doing well off late. They've gone up significantly, and they got good enough cash and some debt. I think they can manage with this cash pile they have. And from a market cap perspective, they are doing pretty okay. these early stage, clinical stage companies, they have these ups and downs, which we need to expect. As you can see here, 161K million dollars revenue here, and it dropped by half. It's expected for these companies as they bring some drug into market. That's when stock will pop. If the drug goes bust or FDA approval has got some issue, the stock falls off. That's why when you buy these companies, make sure it's not already at the top, and look for some pullback and then get in. So with that, from a revenue growth perspective, I mean they're not growing that much or even negative at times. It's really up and downs when it comes to these smaller companies, especially these clinical stage therapeutic companies. From a EPS earnings per share perspective, same story here. A lot of negatives, all negatives here. But EPS surprise, on a surprise basis, they've surprised Wall Street couple times. Latest round or quarter, they have a negative surprise. The story here is really, they have some revenue, but they're not still making any profit. But these guys are really working on coming up with the new way of treating, this cancer disease. So with that, let's jump into their quarterly earnings call itself and what the company is talking about. So we have Tom Silvick here. He's basically saying, they have new treatment options with large and lasting benefits for people with the cancer. So really, they're working and committed to come up with the new treatment options. And they also have this new the trials going on in 15 countries to really fight the gastric cancer patients, or to come up with the cure for gastric cancer, which is a good story here. And they got good amount of cash, about $112.9 million. um, and I think they're using this capital to really bring the drugs to the market. And they also expect their full year 2020 net cash. They want to use some of those cash in the operating activities. So it will take up around 70 to 75 million. And they still have some money, to continue their operations. So as you can see here, company has got a novel cause, and they're coming up with treatments. They got some good cash pile. They're working with the partners and governments, as we can see. This is a good company. I would wait for some pullback and then buy. By looking at the company chart, you can see right now, you might have to wait for a little bit pullback before you buy the stock itself. Next is Celldex Therapeutics. It's CLDX. It's about $1.06 billion company, and these guys are also into manufacturing, commercialization of these novel therapeutics. And they're looking at they're looking to engage the human immune system to inhibit the tumors and treat specific types of cancer. And 82% of the employees approve the co-founder and CEO Anthony Marucci. Stock price is around 26.90. So here, I think stock, came down. Now they're trying to go up. This could be a good time to get in because they are still trying to make their way up. And from a fundamental perspective, as you can see here, we got market cap, which is increasing slowly but steadily. This is what I like to see in a company. 37, 29, a little bit bump, that's fine. 508, 586. Right now they're into $1.06 billion. So by looking at this, it tells me they are really up to it, and they are grabbing the market share and coming up with some new products. And revenue itself, it's up and down, as you can see. 3 million back in December last year, or year before, and now it's 2.05 million. So these companies are really clinical stage type companies. So it's you got to watch out a little bit on the revenue. You can't expect a revenue consistency because they're into discovery of new way of doing things. And from a revenue surprise, they've been surprising negatively 3 out of 4 times. And on the EPS side, they've been surprising positively but negatively in the latest quarter. So with that, if you look at the earnings statement itself, they have initiated some phase 1B studies for for an indication here. And they're also expanding, their developments into additional areas. And they have good amount of cash, $199.6 million. And they also have an outlook, they can sustain their operations through 2023. So these companies are all about, getting good amount of cash, preserving the cash. In the meantime, get some good drugs and indications into the market. With that, I feel comfortable about this stock here. As it's trying to make its way up, it could be a good time to get in. Low price stock, and we can participate in the appreciation. Be careful, don't put all the money. You just go with a small amount, watch the stock, and then you can add more as there is some more pullback. Next, we'll talk about Curis Inc. CRIS is a ticker, and it's around $870.81 million company, a little bit smaller as you can see here. And these guys are into development and commercialization of drug candidates for human cancer. They got various drugs in the pipeline. And stock price is about $9.86 million. $9.86, and 74% of the employees approve the CEO here. And they got good amount of cash and some debt which is manageable. And as you can see, a stock price has appreciated a little bit. I would, a little bit wait for a pullback. I think it's right now it's pulling back. I would, wait for maybe a little bit pullback and then initiate a small position. It's a low price stock, so you can initiate some position, wait and watch and add more. So with that, from a market cap perspective, this is what I like to see. Steady increase, 25 million back in December 2019. Now they're 836, and now it's $870 million. So there's a good market cap acceleration, which tells me they're doing right things. Wall Street is liking what they're doing. And from a revenue perspective, it's the same story with these early stage companies. It's a little bit up and down all over the map, which is understandable. And they've been surprising Wall Street with the revenue surprise, but surprise is, as you can see here, it's in 1090K, and it's basically low surprise, which is okay, understandable. And from a EPS perspective, earnings per share, they have been surprising Wall Street consistently, albeit on a smaller base. And they got good gross margin. I like to see this 95% gross margin, which is very good. And net margin is negative, meaning they're still losing money. So with that in mind, let's look at what CEO is talking about here in the earnings call. They've been talking about, they have multiple indicators, multiple inhibitors, and they're also engaging in with the patients around relapsed refractory non-Hodgkin lymphoma and also acute myeloid leukemia. So it's really, some of these high risk candidates, I think they're doing a good job coming up with these inhibitors. And they're also working with government agencies, National Cancer Institute, and also coming up with new clinical sites. It's good to see these cooperative research development agreements, and they are partnering with the government agencies. From a financial perspective, I think they reported net loss, which is understandable, and they also have money or cash which can take them through second quarter of 2021. These companies are really work off of some grant from government agencies and get some funding and work off of that, which is very typical of these early stage companies. With that, by looking at the appreciation in the market cap and looking at the stock price and looking at what they're doing, I feel comfortable initiating a small position in this stock and watch how it goes. Next, let's look at Aspera Women's Health. AWH is a symbol. It's again a little bit smaller cap company, $807 million company. And these guys are all about women's health. And they look at bioanalytic diagnostic services. They got various indications for ovarian cancer and gynecological health outcomes. And they have a serum test to identify malignant ovarian cancer. And CEO is Valerie, and stock price is 7.24, which is a low stock price. And if you look at their cash, they got good amount of cash for the company of their size and low debt. And stock chart is pretty nice, as you can see here. They've been going up steadily, but nicely. Um, and the stock price is 7.24. This is a typo here. And if you look at the market cap itself, they have been growing the market cap pretty nicely. 78 back in 2019, 80, 386, now 807. So very nice acceleration in the market cap. I like to see this in companies. And from a revenue perspective, as you can see here, nice, revenue, not too much. It's a little bit less from a revenue perspective, but it's a smaller company. And they surprised Wall Street with a positive revenue surprise in 9:30 September last year, and the negative surprise a couple times. And from an EPS perspective, they're in line twice and negative two times. And gross margin is okay. It's 34, around 20-30%, which is manageable. These smaller companies, understandable, and they're still not making it from a net profit perspective. It's negative. What I like about this company is really this company is committed to improve women's health. I could see that from their earnings call and their transcripts. And we have earnings announcement on November 12th. Basically, they are saying they will continue to work on the pipeline of their products, and they're also strengthening their financial position. And they have right now, last year, as you know, we had a lot of COVID related impacts, but as of last September, they have basically 95% of pre-COVID level operations and revenues, which is a good story. They bounced back from the COVID impact. And they're also working with all these insurance companies like Anthem, Blue Cross, Blue Shield, to make sure their testing is acceptable by these insurance companies. And they also saw people ordering their tests. It basically they have a lot of repeat customers. 84% of the physicians ordered for repeat customers, which is a good story. And they're also, most people take their diagnostic test to see if they need to go with the surgery or they can postpone the surgery. And even this diagnostic test, I think they're expecting it to be 68% of the product revenue, which is a good story. I think they are really focusing on the women's health and coming up with these diagnostic products. And in from an outlook perspective, they want to continue to launch new products as we go into 2021 and 2022. Looks, by reading through the transcript, it looks like this company is committed and they want to better the women's life. That's a great story. And being stock price being so low, I would recommend this company for your portfolio. And you can buy some, keep it, keep watching the stock, keep watching the stock, because these companies really working with the insurance companies, working with the government agencies, and making sure their product can be consumed by, all, to improve the women's health. With that, let's look at last two companies profile. Next is Nand Quest, ticker symbol NK. It's around $3.55 billion company, and stock price is 32.49. And this company is really about immunotherapics. So this, human body has got natural immune system to kill cancer, and these guys want to harness that unique power of human immune system and make sure we can kill these cancer with these natural by enhancing our natural systems. CEO is Richard Gerald Adcock, and this company has got $67 million cash and some debt, which is manageable, and stock price is relatively low, 32.49. I like the chart. Chart really shows they are doing a nice progression of late. Stock has done nicely. And if you look at the fundamental itself from a market cap perspective, I like this steady acceleration 373, 283, 1.32, and a little bit bump here, but now it's $3.55 billion, which is a very nice acceleration. And one thing you might notice by looking at this chart is look at their revenue. It's a very low revenue 68K back in September, 1K, 21K, 9K. That tells me the company is really focusing on these new research and development and getting the drug out. So they're not too much worried about top line at this point, but more into drug development, research, and development type areas. And I would not, worry too much about the revenue increase because they're coming off of a very small base, and it's really not a good comparison to look at. And they've been surprising on the revenue front, which is again I would discount at this point because it's a very low revenue base. From an EPS perspective, it's again I would discount this. This company, the thesis to invest is really, hey, this company is doing a great job working on this natural killer cells to treat cancer, and they have a lot of money to work with, and stock market is really liking, and basically awarding them with the higher multiples and higher market cap. So with that thesis, I feel comfortable investing a little bit in this stock. Open a small position and watch, especially because they have really nice research and development, and they're committed. If you read their transcripts and they read their prospectus, this company is really committed to really work through this immunotherapies. Next, let's look at another small company. It's Bicycle Therapeutics, BCYC, around $541.57 million company. These guys are also into biopharmaceuticals. They focus on developing novel class of medicines. They call it as bicycles. This is really for underserved. This market is underserved by existing therapeutics. And the CEO is Kevin Lee, and they're based in UK. 25.42 is the stock price. Ignore this. This is a typo. With that, this company, as you can see, a nice stock chart. I like the way they're progressing, and they got good amount of cash, 149.84 million, and some debt, which is really manageable. I like the steady acceleration in stock price. They have some lows, some highs, but overall, higher highs and higher lows. I like it. And from a market cap perspective, it's nice acceleration as you can see here. It's a pretty steady eddy, 169, 245, 284. Now they're into 541. I could see this company, doubling again and becoming a $1 billion company in a quarter or two. So with that, if you look at the revenue itself, revenue is all across the map, 5 million back here, 1.57 million here. That's why these companies, you got to kind of look for the pull back a little bit. This could be a nice opportunity because they pulled back. And if you look at earnings surprise, they have surprised twice, they have missed twice. Same story with the EPS. And gross margin and net margin are not meaningful yet because there is not much from gross and net margin perspective. And from a earnings call they had back in November 5th, looks like they raised some money, $50 million through this Hercules Capital, and they also got some grant from UK, Innovate UK grant, and they're using it to do the exploratory research. into novel bicycle-based interventions. And these guys have got good amount of cash, $149 million. And they have some net loss, so they should be able to carry forward their operations with this and take it from there. With that, I recommend this company. You can open a small position and watch it, and I'm sure this company will double as you go forward. Now let's look at just a conclusion and see what makes sense. And also before that, let's look at um, performance itself. How are these companies performing, and take it from there. So this is a monthly performance chart. I have the companies that we talked about. The one in green background are my favorites, and we got stock price here. And also I have how much they're off of 52-week high. It kind of tells you, are they in a near 52-week high or a little bit lower. And then I got monthly performance of these companies. So let's look at a couple of them and see what how is their performance. So if you look at Fprx 5 Prime, stock price is at $37. They're almost at 52-week high, 1% off of 52-week high. And as you can look at the chart itself, they are kind of bouncing up and down. Whenever they come down, they suddenly go up. And if you look at off late, they had some bump back in December and January, but now they shot up. So I would wait for a little pullback here. It's we can't. We can initiate a small position, but shouldn't buy too much at 52-week high. Um, and if you look at CLDX, I think probably this has got some nice pullback. Good to initiate some position. And as you look at the chart here, Mirati Therapeutics, I think it had a good pullback. It's good to initiate a position. And same story here, TPTX, Turning Point. I think they also pulled back pretty hard. So these companies here, where they pulled back pretty hard right now, even Surface Oncology for that matter, you could invest, a little bit. I'm sure they'll bounce back, just like they've bounced back in the past. And the companies like Turning Point, Mirati, Beijing, Novashore, Vanda, even Guardian Health. This is one of my favorites. I've been watching this and buying it all the time. Whenever they fall off, they always bounce back. With that, let's look at a couple more performance of couple more stocks. We have Gritstone here. They're 60% off of their high. This company, I think back in January, they talked about they're working on a novel coronavirus, new strains, how to contain them. That's why stock shot up and then they came down. So this could be a good time to initiate some position here and watch. Very early stage company, and looks like they have a way to control these new strains of COVID-19. And we talked about Bicycle. It's a good company. Good to have initiate some position. 30%, 31% off of the 52-week high. And Lilly is a great Lilly. I love this stock. This is a very good company. I would buy this in all pullbacks and keep adding to position. It's one of the core position. Next is Siegen. Again, it's a genetics type company, and off late genetics companies are a little bit not a favorite of Wall Street. They pull back. A good time to initiate some position here. They always come back. AbbVie, again, great American company. They have been doing very nicely. I would buy AbbVie in all pullbacks. Now they are almost at the 52-week high, as you can see here. But it's a good company. I would buy some and add as through the pullbacks. And those are my favorites here. Let's now look at weekly, monthly, quarterly type performance and take it from there. So this is a conclusion slide, of all the companies. I like the companies which are highlighted in dark or a bold color, mainly because of performance and the revenue growth. In many cases here, it's a negative, which are early stage companies, and gross margin. And also I look at performance itself. How are they performing on a yearly basis? It's a very nice 1 year performance. And how are they doing on a half year basis, quarterly basis, monthly basis, and take it from there. And these are my favorites here. Five Prime, Celldex, Curious, you can go on and on. And some of these are very early stage companies in the beginning, and then you got some of the good companies, or a little more stabler companies, like Turning Point, Mirati, Beijing, Novashore, Wanda, Guardian. These are kind of tried and true companies, including Lilly, Siegen, and AbbVie. So, with that, thank you very much. Again, cancer is a leading cause of death. I like these novel companies really working very hard to cure this disease. And happy investing. Thank you.